WTI crude futures dipped toward $81 per barrel on Wednesday, marking the third consecutive session of decline, prompted by an industry report signaling a notable resurgence in U.S. crude stockpiles. Concurrently, the lingering prospects for a ceasefire agreement in the Middle East continued to exert downward pressure on oil prices. According to API data, U.S. crude inventories surged by 4.9 million barrels last week, following a 3.2 million barrel decrease in the preceding week, representing the most significant gain since mid-March. Additionally, the US EIA reported on Tuesday that U.S. crude production escalated to 13.1 million barrels per day in February from 12.6 million in January, marking the most substantial monthly increase in approximately 3.5 years. In the Middle East, Egypt spearheaded efforts to resuscitate stalled peace negotiations between Israel and Hamas, thereby diminishing the risks of a broader conflict in the region. Meanwhile, investors adopted a cautious stance ahead of the U.S. Federal Reserve's policy decision, apprehensive that it might uphold higher interest rates for an extended duration. Given the confluence of rising inventories, production levels, and geopolitical developments, the short-term outlook for crude oil appears bearish. The intermediate trend turned down on Wednesday when the market crossed to the weak side of the 50-day moving average at $81. A sustained move under this level could lead to an acceleration to the downside, with the long-term trend indicator or 200-day moving average at $79 the next target. Thank you for watching. Please like and comment to support the channel. See you in the next one.